Hello, everyone. We're very excited to be kicking off Unvalley today with the originators of Upside, the first podcast focused on the upside of starting companies outside of Silicon Valley. My name is Jackie Dietrich. I'm with Established, a company that focuses on startups and innovation between the coasts, and we're a proud partner of Powder K. Upside.fm is a Fortune top business podcast, and co-hosts Eric Hornung and Jay Clouse call Ohio home. Based in Columbus, Jay is the founder of Unreal Collective and Freelancing School. He's been part of startups that were acquired and were venture-backed and has led product teams. He is a CES media trailblazer, and he writes about product management, and freelancing. And now he focuses on applying that experience to creative businesses. Welcome, Jay.
Hey, super excited to be here, Jackie. Not that I need more time to hang out with Eric, but it's always a good time hanging out with Eric.
Well, Jay's co-host at Upside.fm and joining us from Cincinnati is Eric. Hi, Eric.
Hey, how's it going?
Podcasting. He's an investment banker who creates financial valuation models and analyzes for the middle market at RKCA. Eric works with the leadership and boards. I just realized, Jay, your last name is Clouse.
Yes, it rhymes with house.
And Eric Hornung. Geez, sorry guys. Let's get off to a bumpy start. Why don't we know? It's great to have you both here. Eric is works with leadership and boards at RKCA's direct investment companies and in the M&A advisory practice. In both capacities, he's responsible for creating financial valuation models and analyses, conducting financial, industry, and buyer research, and assisting corporate executives on strategy. He has a background in both corporate finance and cryptocurrency. Hi, Eric.
Hey, how's it going? My background doesn't sound as nice as Jay's. Not because of you, because of the finance side of things, you know?
Crypto's having another moment, though.
It is. How about that?
Yeah.
Crypto's having a moment, and I hear that there are some crazy things happening in the world of valuation. So number crunching is no joke right now.
Welcome to the Upside studio, by the way. You guys are sitting in what every guest who comes on Upside sees. This is the background that every guest sees for me and for Jay.
This is it.
I'm super excited to hear about the kind of what you're seeing from your guests, what's happening with the podcast. So we want to jump right in, and we're going to do our best to bring in questions and comments from the audience. So if you want to be a part of the conversation and you're in the audience, please check out the chat to your right under the stage. We can see Nicole and Charlton. Hey, Charlton, already joining us. So feel free to leave any questions, comments, or compliments for our guests there in the chat. So for our audiences that aren't familiar, tell us more about the podcast. I'd love to hear more about what really motivated you to start it. And, what are you looking to contribute to the world through Upside? So
Upside started as Jay and I having a very naive idea that we could be venture capitalists very quickly. We then realized even more quickly that we don't have any money. So I think he's going to grab the book, which, look at this.
Did I find it first?
Yeah, you did. We read a book called Angel by Jason Calacanis that kind of walked through how to be an angel investor. And we said, what if we could do this without having any money? What if we launched a podcast? We'll find entrepreneurs, we'll interview entrepreneurs, and we'll write verbal hypothetical deal memos on entrepreneurs. So that's how it started. It started as a cashless VC fund.
And so, Jay, what keeps you going?
What keeps us going is there's a bottomless amount of content we could create. Eric and I have spoken with founders in probably close to 70 different cities across the country, 70 different ecosystems, which are all wildly different and all wildly fascinating to learn about, because there are some clear similarities across some of them, and most of them have very different sort of things going on. And so for us, we're trying to paint a picture and show more about what different ecosystems look like and what they're doing that could work for other ecosystems. And it just seems like that could take the rest of our lives because there's so little national media or even local media for these ecosystems, and we feel like we're playing a key role in helping tell these stories. And we take that very seriously, and we think it's something that the world needs more of.
So say more about these ecosystems. Like what are you seeing in terms of ecosystems that are really strong? And is there a common thread that's really connecting those that are thriving right now?
I think that when we look at ecosystems, we tend to look at them as a cross section. We look at them today in 2020, and we don't look at them over the course of their history and how they've developed. So although we focus outside of Silicon Valley, I think looking at Silicon Valley as how it developed tends to be pretty helpful in understanding where other ecosystems are and how they are emerging along their own journeys. So Silicon Valley started in the 50s, right? Like there's, in looking at something like a Columbus today in comparison to Silicon Valley, or looking at a Cincinnati versus a Austin, I think it's a little tough, but there definitely are some kind of core things that help communities accelerate faster. One of those that we found is collaboration, and that looks a few ways. It looks like less gatekeepers, more founders knowing founders, founders talking to founders, and more of I think Matt mentioned this in the main event, more of a blue ocean rise all tides kind of methodology, as opposed to a land grab.
Yeah, I 100% agree. We talk to these different ecosystems, and a lot of them have very few institutional players or ecosystem support systems, like very small. And typically, as they grow and as more people come into town, there's often a risk of there not being collaboration with the new players, and more of a almost protective mindset of the existing institutional players saying, this is how things are done. You go through us to get to the next level of your business or raise funding or whatever. And the ecosystems that are doing well are more so embracing new players and new institutions and encouraging that, because it's just good for everybody when there are more options and more pieces of the support system. But other things that we see that are really common, a lot of the cities that are growing have universities as talent hubs and talent attractors. It's something that is really core to them. They have some sort of legacy industry experience where they say, historically, this city has been really good for insurance or logistics or something, because they have some Fortune 500s there, and they're embracing that as, well, this is a strength then for startups in this area to come in and get a foothold and grow here, because there's a lot of knowledge workers here that have experience in that industry. They can very quickly get some big name customers that mean something in that industry. The ecosystems that we see doing well embrace all of that.
And do you find that in these communities that most of the founders know one another?
Most of the founders, I would say yes.
I'd say
Eric.
in the better communities, there's more likelihood that founders know each other. In the communities that maybe don't feel like they're taking off as much right now, I think that there's more cliques and niches around the community where there are groups of founders and investors and community builders who know each other. But if you walk 30 blocks another way, there's another kind of ecosystem hub that is not at all connected.
Well, you have the opportunity to interview so many founders as part of the podcast. What's the most surprising thing that you've heard lately from interviews with founders?
We were chasing this kind of remote or distributed team trend before COVID happened, which was really interesting to us because founders were just realizing that it provides a lot of optionality. It helps them hire really great talent when they aren't constrained to their geographical area to hire that talent. And that's obviously accelerated, but that was something that we were looking at pretty early and we're really interested in because we were seeing these teams that were operating at a high level and they were a small team, but they were a distributed team where they would say, yeah, we don't really have an HQ, but we have a couple members in San Diego, things like that.
I think that's a trend that we've seen accelerate over the last year. And even before COVID and working remotely, I think it was something that a lot of people call it the mullet strategy, where you have kind of your front-facing people, the financial people, the people that may be interfacing with investors and maybe where your customers are in a New York or a San Francisco, and then the rest of the team elsewhere. I think that that's going to be a trend we see continue to increase. Even within Ohio, we see companies in Columbus hiring in Cincinnati and vice versa. And those are only 2 hours away. So
Yeah.
I see flexibility definitely increasing.
We also kept hearing from founders who were, really taking this seriously and working really hard. They didn't have as much of a tribal, like, this is my city, everything is about the city. They were more like, this is my business and I'm going to do what it takes to make my business successful. And often for a lot of them, it was still having a tie to a coastal city, whether it's San Francisco, whether it's New York. If you call New York coastal, they might take like short deployments to go out to San Francisco for a few months to fundraise. They might just have connections to investors in those areas. And they weren't bashful about, taking advantage of that. They realized like, yes, I can succeed anywhere. And I'm going to succeed in the city for this reason. Like usually they had a very good reason for why they were there. And it was often rooted in industry. But they just knew that it would be advantageous for them to continue to have a route where a lot of the funding was.
I would also, I'm going to add one more kind of surprising trend that has popped up to us. I've noticed more or less and less, I need to go raise venture capital dollars to be an entrepreneur. I think since we started the podcast, that trend has accelerated. And lately we've heard it even more. It's not, I need to go raise a seed round and a series A. It's, I'm going to bootstrap this thing and I don't really want to take investment money, or I'm going to figure out how to take some non-traditional financing. I think that entire world is in the early innings of exploding. I think that's very good for entrepreneurship around these communities, because it's not just one type of entrepreneur that gets funded and gets to be a big company. Other people can access entrepreneurship.
So in your perspective over, different ecosystems and sort of this porosity that exists, do you have, and this question is from the audience, who's doing it right?
So we can answer this, but it's going to be a little bit conjecture, because here's the thing. Like we hear a lot of theory when it comes to like, how do we build the next Silicon Valley? But it's so young that we actually haven't had enough time pass by to see if that theory truly plays out. So the theory that we hear a lot is, hey, have a company that reaches unicorn status, does really well, reaches $1 billion, makes wealthy individuals within the company. They'll spin off, they'll start companies, they'll also angel invest into the ecosystem. How many ecosystems outside of Silicon Valley can you say has actually run that cycle and could do that? Chicago, maybe, I think is probably like the closest. So for me to be completely shameless for a minute, Columbus, Ohio right now is, I think, in a good position to see if that plays out. Because a couple years ago, we had Cover My Meds, which was sold to McKesson for more than $1 billion. Root Insurance, which was started just about 5 years ago, was basically incubated within a venture firm from guys that relocated from Sequoia and came to Columbus. And now Root Insurance IPO'd. We had an IPO from Columbus, Ohio, and that made a bunch of wealthy individuals. Let's see if they start companies. Let's see if they invest. Olive, which was one of Drive's first investments here in Columbus, was just valued at more than $1 billion. So I think Columbus is in a place where we'll see if that flywheel idea plays out. And I'll pause there and let Eric take a swing elsewhere.
Yeah, I think that the flywheel is one theory and one concept. I also think that if we look at who is creating momentum, there are states that are trying to create momentum with state sponsored or state matching funds. So Ohio is one of those. Pittsburgh is, or Pennsylvania is one of those. And I have a weird inkling that Salt Lake City is doing a really good job. One of the hard things about Salt Lake is getting in the door. They're notoriously closed to outsiders. But from everyone I've talked to there seems to be a very large culture of entrepreneurship, where starting a company isn't something that is societally looked at as not the right path. I think the team up in Madison is doing something really unique. I think to Jay's point, and this was mentioned in the chat a few times, Indy has done a really good job with the flywheel with Exact Target and High Alpha.
Mm-hmm.
But yeah, could go into a few more that are doing really. I think Memphis is probably one of the most collaborative ecosystems that we've seen and talked to. there's a lot of really unique models for how you're going about it. So answer the question, how to do it right. I don't know if right is the right question. I think it's how do I do it so that our city grows and grows. Oh, wow. We lost Jay. Classic. So I think that's more of the question. How do we do it in the right way for our city? Not how do we do it right based on the Silicon Valley model?
Well, we'll give Jay a chance to come back online, but the next question was for you, and I'm going to see if I can get back to it. It's from Brandy, Eric, and it's about non-traditional financing. And Brandy's asking, is it non-traditional by way of necessity? For instance, for women or Black women in particular that are seeking alternative funding, is it because they have to? Do they want VC and funding and can't get it? Do you have a sense for that, for what's happening in, across communities?
I think a lot of that is the unfortunate reality right now, but I don't think it's the idealistic mentality. I think that if I put my financial hat on here for a second, if I'm going to underwrite a company using the venture capital model, I want that company to be worth $1 billion within 10 years. That's simple. That leaves out 98% of entrepreneurship in the United States. So right now what happens is, to Brandy's question about women and Black women in particular, the venture capitalists who are underwriting those companies don't see $1 billion markets in that because probably they don't understand them. If we're just using like a numbers game here, it's a lot easier to understand something that you're close to. And the majority, I think it's 80+%, I think it's 90% actually are white men in venture capital. So the problems that a Black woman specifically sees are going to just be different than what a venture capitalist sees as $1 billion market. Over time, that's going to change. We already see it changing. It's in the early innings. It's going to happen gradually, then suddenly. But the alternative financing, I think, is more of a financial underwriting mechanism for looking at companies that can be worth $100 million or $10 million or $500 million that currently might be getting venture capital money because we just have a surplus of venture capital money, but would probably be better under a different mechanism.
I want to jump in here real quick, if you don't mind, Jackie.
Please.
Seeing a lot of activity in the chat that I just wanted to agree with of, I don't like the rhetoric of what is the next Silicon Valley, because there won't be one, there shouldn't be one, and we don't care. Like, how does this ecosystem become the best version of itself? What does it do different? What does it do unique? How does it say, this is what we do here really well and bring people in? And some people will still try to, or some ecosystems will still try to do the, we want to incubate unicorn route here. But I agree also that you don't necessarily need unicorns. You can have a lot of really great companies that don't reach that mythical figure. I do think that the math is a little bit inarguable, that if you do have unicorns with a lot of employees who become wealthy because of the value of that company, that's a high leverage event, a high leverage activity that can grow things faster. And I think that's why it's talked about more. Instead of saying it's a necessity, it's kind of here's a really efficient route to get to what we're trying to do. But you don't have to take that route.
When you're speaking, spot on in terms of the concept of Unvalley and what it means to have identities and the kind of contributions in terms of tech innovation that are unique to areas between the coasts. What's your take on, what is it that really matters when it comes to those distinguishing characteristics?
I mean, I think what matters is, what does the city want to be? Like, I am more and more interested in what creates a strong city, a strong community, a strong town. We actually, Eric and I love the team over at Strong Towns because they think more holistically about what makes this community great. And you may not want it to be like this crazy growing tech place that becomes the identity. Like, you might have a thriving arts culture, and you want that to be there, and you want to support that with a startup culture too, and that's part of it. To bring up Columbus again, just because I'm closest to it and I know it, I wouldn't even say Columbus has any real identity that's strongly rooted to, like, Nashville has more of an identity. LA has more of an identity. Columbus is inventing itself, and it's inventing itself on a lot of different axes. And I think that's great. And a lot of cities are doing the same thing. So you don't have to be a startup city. And a lot of people don't want that. But the sect within the city that does, like, they want to know that they can be supported there in doing that.
Well, and you, Jay, you've built a brand around supporting creative businesses. What got you so excited about that prospect around building more creative companies?
I mean, I just simply put, I think there's nothing more interesting than being around and working with people who are compulsively creating something. And weird creative stuff is interesting to me, but the same is true just for any startup company. Like, you talk to any founder, they're obsessed with the thing they're doing. They're doing it pretty much out of compulsion. And that's just like the best energy to be around, no matter what that is for somebody.
So Eric, I know you've got a lot to say around VC, and you have some chat going on with our audience. Would you care to touch on valuations and go back to that conversation a little bit? We've been interviewing through Established a number of the startups that are involved in our Startup of the Year program, and we've heard that valuations are just nuts right now.
Yeah, I think it depends where you're investing, but if you're investing at an angel level, the valuation is, for all intents and purposes, almost irrelevant, because what you're investing if you're investing in a venture capital style model, that's always important to clarify, because there are different methods of investing. But if you're investing in something that you think is going to be worth $1 billion, if you buy in at $10 million or you buy in at $6 million for a valuation, it doesn't really matter. Where I think it's becoming more and more interesting is in the growth equity space, which we don't see a lot of in between the coasts. A lot of the growth equity shops have kind of still maintained their presence in New York and San Francisco, a few in LA, a couple in Chicago. And those valuations, yeah, I don't really know what to make of the greater valuation space right now when we're trading at like 150 times revenue for some companies like Snowflake.
What is that? What do you take from that in terms of seeing what the biggest opportunity in the Unvalley really is right now?
I mean, to me, the biggest opportunity is that any opportunity is viable, in my opinion. Like, you can do just about anything from just about anywhere. And if you do feel like, man, what I'm trying to do really isn't aligned to this city or this community, you can still find a way. Like, the way that you create businesses now and can build teams and do things in a distributed way, in a remote way, the opportunity is that you can really design for yourself and for your business the business that you want in the place that you want for what you're chasing after.
There's such a capacity for more, just more everything in the Unvalley. And because of that, I think it's extremely exciting. More different, the things that you don't have to use the things that worked, because we're not sitting there as like in first place and just kind of running the same playbook over and over again. We get to test and try and learn and do. And I think that the more we do that, the more unique communities, cities, businesses are going to come out.
We also, this is something that should have come to mind first. Eric and I think there's a huge opportunity for localized media in these places. Like, there's just not a lot of media love, attention, or, existence in so many of these communities for these startups. And it's such a huge part of a startup's growth and initial marketing. If you're lucky and you're starting in the Unvalley and you raise a Series A, like, you might get the TechCrunch headline, but you have so many other milestones along the way that you want people to know about and share and celebrate. And if you don't live in New York, if you don't live in the Valley, you often don't have an outlet to share that news. Eric, you want to talk a little bit more about that?
Yeah, I mean, just try to cold email someone from TechCrunch. And if you're not in Silicon Valley and you don't have a relationship with one of the VCs who they're friends with, their writers exist in New York and Florida and wherever, but I think we did a quick perusal of what percentage of companies on a random day were out of Silicon Valley, New York, and Boston, and it was like 99%. It was I think it was 59 out of 60 that they covered that day. So there just isn't an opportunity. And I think we did a quick survey of people who've been on the podcast, and 60% of them had never been on a national podcast before. And these are startup founders who, if they were in a different location, would already have been on 10 podcasts. They would already have had articles written about them. People would have been talking about them. So there is less attention being paid. That's for sure.
And so you're speaking to how local media can help to combat that. What are you seeing, the startups that are able to kind of gain that national foothold? What are they doing? Or what advice would you give to other, founders who are building companies to kind of gain that foothold?
I think you need to know, honestly, because we're on the other side of media sometimes, like we get so many bad pitches. If you want to get some coverage, it's really not that hard. It's just like writing a good pitch. And you need to understand that we think in terms of stories and headlines. So if you're going to cold email somebody for one of these opportunities, like write the subject line as you imagine their headline. And if that's interesting, they'll open the email and then write the email to hit the points that you think they would want to cover in the story and just see why it's interesting, and you can use the fact that you're not in the Valley to your advantage. You can say, and this is being done in South Dakota, but you need to almost like do the imagining and create the story for them, show the story, package it, and say, I think this would be really interesting to your audience. And often people will agree. But also at the end of the day, if a cold email like that doesn't work, the world still runs on people. Like you can meet people who know people and talk to people that way. Like that's going to serve you in more ways than one as a founder. And it's very doable.
That's very helpful. Eric, did you want to add to that?
No, I think Jay nailed it.
Well, and part of the reason we care about this so much, Eric's been working to actually create some local podcasts in different cities. Upside is this national coverage engine, and as we talked about at the top of the conversation here, we have a bottomless number of companies we could cover, and we can't possibly get as deep into each individual city as we want to.
Yeah, that's one of the just limitations of a national podcast, a national media company in general, is that you have to do some curation and some selection. So you can be broad, but you can't be deep. So by launching something more local that feeds up to a national channel, we can talk to 50 companies in Cleveland a year, and we can't do that via Upside, but we can take 2 or 3 of those and highlight them on Upside. And then we can do that at all 30 to 70 cities that are kind of in that, I don't love this phrase either, but I don't have a better one, that tier 2, tier 3 kind of space. And now if you have 70 cities with 50 episodes a year, you have a lot more media attention kind of funneling up.
With the Unvalley audience, we know that a lot of folks are moving in or looking to get into the tech industry between the coasts. Any advice for those that are, boomeranging back to their hometowns or that are looking to really get into tech between the coasts?
I did it. Well, I didn't get into tech, but I did boomerang back. And Jay's point about it all comes back to people is spot on. The best thing you can do to get involved in the community is just show up. Show up to one-on-one meetings over coffee, show up to the events that are being put on, show up to random cold emails. And I think you'll get involved a lot quicker by just showing up than you will any other way.
And also, I share this with people who are just sick of their careers all the time. Like you're not locked into your degree. Startup founders need people who are consistent, who are reliable, who are smart, who will take something they've never done before and say, I can learn that and learn it. Like if you can exhibit those skills, we don't care where you went to college. We don't care your experience. We don't care your degree. Like if you can make us believe that you're smart and you're hungry and you're consistent, you're reliable and you're talented, you can find a role or invent a role. Like if you have those skills and you can network with founders, you can network with executives in some of these companies and show that, they're going to say, how can I hire this person? They want to hire the best people. They aren't always looking for, I have this position open, I need to fill it. They're saying, I need to hire the best people. And sometimes they create roles in the interim because they know I can't let this person get away. And so if you become that person for somebody, like you'll find a place.
Go team. Well, we know we can I'll find you both at upside.fm. Any teasers for what's coming next?
If you're interested in Cleveland, you can go to layoftheland.fm. And if you're interested in Cincinnati, you can go to whenpigsfly.fm. And hopefully we'll have a few more shows rolling out in 2021.
If you're in a city in the Unvalley that you think needs local media, a local podcast, and that sounds like you or sounds like someone you know, send us an email. We're looking to spring these up all over the country.
Well, Jay and Eric, thanks so much for your amazing work at Upside and for the Unvalley and being here as part of the Unvalley. We're all so lucky to have you as storytellers and making the contributions of the Unvalley more known across communities. So I want to make sure to let our audience know to head over to the award stage to see who wins the top rated leadership team in the 2020 Tech Culture Awards. That's exciting. And then to check out the Mighty Middle in the next industry track, where we talk about industry and investment trends in the heartland. So thanks again to Jay and Eric and to all of our audience. We'll see you on the next stage.
Thanks for having us.
Thank you guys for showing up and coming.